Hi, it's Steve and Joe from Freshagenda, and Steve, we're back in a week for a weekly take.
In a week.
With just 1 week between the last one and this
one. In
one.
a non-GDT week.
Wow.
Well, let's see if this holds. This works. Is it interesting enough? Surely it will be.
Mm-hmm. We've got a few things to go through, Steve. A few updates about what's happened since we were last with our viewers.
Yep.
Bit on the China balance sheet that looks very interesting. Some US cheese analysis and, of course, chart of the week.
All right, let's tuck into this. So since the last GDT, I mean, just looking at the response, the market's response to what occurred there, we thought generally positive, but let's not get carried away with it because we were very low volume. So, but there has been a reaction. Whole milk powder initially went up.
Yep.
And a positive result, and then came off.
Yes, interesting.
Skim milk powder is a little more bullish, certainly in Oceania, but they're more than $100 increases right through the curve there, but a little more subdued in other regions.
Yeah.
These comparisons are before the event, so that doesn't change much. Just kept things in place, I guess. And skim milk powder was very much a sideways outcome in that.
Yes.
Yeah, with a little bit of a downer, in fact, in forward pricing. So this is interesting and quite a contrast. We've got a couple of yoga positions, Joe, do you think?
And it looks like a plank for EX and a downward dog for NZX.
Yeah, we're a little negative on butter fat in the region. It really requires some strength in developing markets to pull that line up on the left-hand side, but Europe is a little more bullish. This expectation in Europe, both skim and butter, that we're going to see a pretty quick turnaround once we get past the peak with slowing milk. So that's the expectation / hope.
Yeah, and also we've seen a few cuts in retail prices to stiffen up demand, hopefully. So that'll be interesting to watch in the second half of the year, Steve.
Yeah.
Steve, China balance sheet.
We have data analysis we get from China. A lot of people see this stuff. We just like to remind of some of the highlights that came out last week. And we take it as anecdata.
Yes.
It's interesting observation to see what's suggested there and doesn't line up with other things. Some of this does line up. So I think just pouring through it, milk production still growing strongly. This is to March. We saw, however, liquid milk processing
still well down.
Yeah. And look, this accords with some of the statements made by Chinese processors who say they found quarter one a struggle and still seeing some negative numbers, but they expect that to turn around quickly. They also wrote that in December.
Yeah.
So it's just taking a lot longer to get going. Knock that into whole milk powder output, which is significantly up year on year. These are big percentages. The volumes aren't massive, 60 to 70,000 tonnes a month. When you overlay those things into a balance sheet for whole milk powder, it seems, while we're seeing more production and certainly domestic demand in China for use of powder is well down, 15 to 20% down, the cut in imports is just keeping stocks to use about where it's been.
Yeah.
So not a lot of change there for the last couple of years. So that's managed. So until demand really roars, until we see milk processing demand change and that soak up more milk, and we see powder applications also draw a lot more ingredient, that's not going to change.
Yeah, true. But I guess the good news is that there's not a huge stock overhang to work through, which is a little bit different to skim.
Quite different, which shows that the early fervour in the new year to buy product, ship it into China, was a little overdone. So this might stay quiet for a while if those numbers are accurate. Okay, over to the US.
Yes.
The dairy products report came out last week. It showed that cheddar is about the only major category where there's growth. That's an avoidance of mozzarella because the export market conditions are weaker, plus a lower export performance in skim milk powder. And there's also low expectations because skim milk powder output was actually well down again. That's non-fat that's up, which is more domestic use and the Mexican market. So we see, just an interesting lineup there, very much tuned to where the milk is and where the market is. So that's one to watch. The thing, though, with the US is what's happening on the demand side.
Yeah, a little bit worrying. So we've got that red bar there, which is overall cheese disappearance, Steve. But I guess we're asking what's behind those numbers in terms of cheddar versus mozzarella.
That'll come out next week. We'd expect cheddar is up and mozzarella is weaker. That's against the comparatives. And you can see last year we did have strong growth occurring at this time.
Sure.
So it's probably backed off a bit. I mean, restaurant business is picking up.
Yeah.
So that's swinging a bit of spend across.
Yeah, that's right.
Which should favour cheddar more. And maybe, the retreat in mozzarella is not necessarily, it's just a shift in consumption within cheese. But,
so from takeaway to eating out.
But here's a perspective on, just monthly, because year to year can get confusing, particularly with the big swings we've had year on year going back in that chart. But just we're bouncing around. But March was a bit of a downturn. But yeah, not out of ordinary. I mean, it's
but one to watch anyway.
The other thing in US, some of these value relativities, we've seen a big swing in the class 4 returns being much better now than class 3, dominated by cheese. So that's just widened up.
Yes.
That's a long chart there. But the one on the right, I reckon, is really interesting. We usually see a relationship between, the price of corn impacting margins on farm, therefore slowing milk potentially if that moves up.
And stiffening up cheese prices.
Yeah. But they're going the other way this time.
Yeah, very interesting.
Corn prices come off quite a bit lately, whether that's fully reflected there or not, but you see the cheese price tanking quickly. So that's to do with the reverb from the export markets and pushing more product back to the market in the short term. So
into those barrels. Yeah.
Less to do with fundamentals, perhaps.
Yeah, potentially.
Right. Chart of the week.
Chart of the week.
What an introduction.
Yes. Thought we'd go across to New Zealand. Some interesting data that's just come out of the Reserve Bank of New Zealand, just looking at where debt servicing is in terms of the dairy sector. So that's dairy servicing costs per kilogram of milk solids produced. And you can see that's gone up fairly steeply just over the last year to 18 months. The other line there is just the index of GDT prices, which obviously has a fairly big impact on what the payouts are for New Zealand dairy farmers. So the Reserve Bank just sounding, I suppose, a bit of a warning note about what's happening to farm margins in New Zealand. In most of the dairy producing regions, we're looking at lower prices, but also lower input costs. But what's happening in terms of input costs for New Zealand, Steve?
Well, one of the important ones is fertiliser, which producers in other parts of the world have enjoyed a steep reduction in fertiliser prices since the gas market, particularly the European gas market, has weakened. And that reflects here. This is a Gulf urea quote we got off CME. It's fallen. It's consistent with what we're seeing in the US as well in those prices, but the New Zealand suppliers are not yet passing that on.
What's going on?
Maybe Kiwi farmers would be interested in taking that up. But that's a challenge. I mean, it's expected to go down, but there's a bit of margin being socked away there.
Absolutely. Yeah.
Okay. Well, thanks for watching. That's all from us. We'll be back from the UK next week. We'll be sitting in London waiting to attend a pretty interesting little conference where Joanne is a speaker, and we'll report from there. Thank you.